Hi, this is Matt Dimitroshin of Telemus Capital with the Week in Review for the week ending March 8th, 2019. Equity markets fell on the week as the S&P 500 and Dow Jones Industrial Average were down 2.2%. The Nasdaq Composite was down 2.5%, followed by the Russell 2000 index, which fell 4.3%. Across economic sectors, 9 of the 11 economic sectors were down on the week. Real estate and utilities, typical bond proxies, were the only sectors up. Concerns around global economic growth, in concert with the view that the market had priced in stronger economic growth, is what led to the fall in the markets on the week. There were several economic items that drove the markets lower. The first was the European Central Bank's decision to have a more dovish stance and provide added liquidity to the economy, in concert with their forecast for a lower Eurozone growth in 2009. In the U.S., non-farm payrolls came in below expectations, showing growth of only 20,000. Lastly, later in the week, the U.S. ambassador to China indicated that a meeting between Trump and Xi had yet to be scheduled, as neither side viewed an agreement as imminent. Outside of equity markets, Treasuries rallied on the week, resulting in yields falling. The 2-year Treasury yield was down 11 basis points, followed by a 13 basis point reduction in the 10-year yield. The dollar was stronger on the week, up 0.9%. Oil fell modestly, down 0.6%. On the year, oil remains up 23%. However, it's still down 27% from the highs it hit in October. Looking forward, there are several economic readings that are coming out this week. Retail sales, along with the Consumer Price Index, are released earlier in the week. Later in the week, we should see indicators around industrial production and new home sales. That concludes the Week in Review for the week ending March 8th, 2019. Thank you, and have a good week.